All right. So, welcome. Today, we're going to talk about navigating the changing landscape and the future of business financing because it has changed dramatically. So, I'm Jerry Detweiler. I'm Education Director for NAV, and I want to thank the Draper Chamber of Commerce for sponsoring this today. They really care about helping their small business community grow, and hopefully, this information will help you as you navigate, these challenging times. So we want to talk about what's going on with small business lending. And let's see if I can get my slides to advance. I'm in Google Slides and they don't seem to want to go. So let me just hop out of here a second. Okay, there we go. All right, so the lending landscape has changed a lot in the past few months. I mean, I can't even describe the difference between January and March. And at NAV, because we work with so many different lenders of different types across the country, we've seen this firsthand and we've been very closely in touch with lenders and what they're doing. So pre-PPP or pre the COVID crisis, I should say, we had about 44 different types of lending, over 6,000 lenders nationwide trying to lend to small businesses, many different options available for all stage of business, all different credit scores. And then beginning of March, it was sort of like the brakes just, were thrown on the freight train and everything came to a quick halt. Now it is starting to pick up again. So we'll talk about that in this presentation. But it is a challenging time and it's changing almost daily. So I want to give you tools so you can navigate the changes without you having to become the lending expert. So what we've seen in the past few months has been a significant focus on the government-sponsored loan program. So those include the Paycheck Protection Program loan and the Economic Injury Disaster Loan Program. And some states have done a very good job with programming as well. The state of Utah, for example, has done a really good job of helping business owners in the state access different programs and learn about options to take their business forward. So depending on what's available in your area, you may want to check out those state resources as well. And then crowdfunding has been this little bright spot in the whole experience. And I'm going to talk about that in just a moment. Now, as we move forward, we are seeing that lenders are tightening their requirements. And so they are going to be looking for businesses that have better credit, higher revenues, and are in lower risk industries. So one thing we have learned very, very clearly from this recent crisis is the need to have your foundation solid. And that's true even of the government programs. At NAV, we fielded so many questions from entrepreneurs trying to apply for these programs, and many of them had trouble because they didn't have the basic foundational steps in place. They spent so much time trying to build or grow their business, but they didn't focus on the foundation. So that's really important. It's something we want to emphasize. So this just illustrates that sort of those blue dots in the background are pre-COVID, the pre-COVID lending landscape, and now in the middle, those are the ones we're going to focus on here because those are the ones that are the most available at the time for the time being. I do want to touch real quickly on PPP versus EIDL. At this point in time, when we're talking today, July 17th, both programs still have funds available. So and you can apply for both if you qualify. So for the Paycheck Protection Program, this is a loan based on your average monthly payroll. I should update that word on the slide. It's not revenue, it's payroll. Maximum $10 million. The interest rate is 1%, and it's either 2 years or 5 years for the repayment period. And 60% must be spent on payroll-related expenses to get full forgiveness. But thankfully, with the changes that they made in the PPP Flexibility Act, which went into effect June 5th of 2020, now it dropped from 75% to 60%. Loans with an authorization after that date have a 5-year repayment period if there's any balance left that isn't forgiven. And you can either choose a period of 8 or 24 weeks for your forgiveness period. So it provides some flexibility for employers. And also there's no personal guarantee or collateral. However, I should add, if you fraudulently apply for a PPP loan, and we've seen cases of this recently, you can be criminally indicted for that. So you definitely are supposed to spend it in certain ways and in proper ways. and I mean and proper, not improper. The EIDL is the Economic Injury Disaster Loan, and unlike other SBA loans, you get this one directly from the SBA. You don't go to lenders. The grants for this are gone. So the SBA has exhausted its authorization for grants. There is an effort in Congress to expand the grants, so we'll see where that goes. But for the moment, you can still get a loan, and the loans go up to $2 million, although I've been told by some sources close to the SBA that they're approving up to $150,000 right now to reach as many small business owners as possible. The interest rate is 3.75% for 30 years, which could be a very low monthly payment for many small businesses. So that's attractive. You don't have to make payments for the first 6 months. And if you're a nonprofit, it's 2.75%. And we've seen all kinds of businesses get this, all the way from independent contractors and Uber drivers who have been approved, all the way to larger businesses with 20 employees or more who have been approved for an EIDL loan. So that's something to look into. There's no personal guarantee for loans of less than $200,000, and there's no collateral required for loans of less than $25,000. But if you get a loan for more than $25,000, the SBA will file a UCC filing, essentially giving them priority collateral interest in the property of the business and some personal property as well. So let's talk about today's financing options and what's available. So for business credit cards, this has been a mainstay for many business owners who want to maintain or improve cash flow, because it can give you up to 60 days to pay for a purchase without interest, depending on how you time that purchase with your billing cycle. And many business owners are attracted to the business credit card because many of these small business credit cards don't show up on your personal credit as long as you pay the bills on time. So as long as you don't default, you can keep the activity or the balances of your business separate from your personal, which can be a real advantage for many business owners. And we do have a list on the NAV blog of which business credit cards do report to personal, which don't, and which help build business credit, and which bureaus they report to. I will say that right now, though, we are seeing that the supply is becoming more limited. Issuers are being more careful. We're having seen some good success with individuals who are applying for some personal cards. Chase Freedom Unlimited, for example, has been a popular card recently with some folks who are using a NAV account and applying for credit cards. But just understand that, it is a tighter qualification. And what we try to do at NAV through our platform is help you understand which ones you're a good fit for. So you're not spinning your wheels and looking around and discovering, oh, hey, that issuer really isn't doing a lot right now. In fact, some issuers have pulled back on some of their card programs. They just aren't issuing certain card programs, that they're not going to issue them ever again. But it's still an option for some business owners. And we also have staff who can talk to you about your options, including credit cards as a financing option for your business. Now, one tip I'll give you is if you are in a cash flow situation where cash flow is tight, keep in mind that the one thing you really want to do to maintain your credit scores is pay your minimum payment on time. The debt you carry on your credit cards can definitely affect your credit scores if they show up on your personal credit, not so much on business, but certainly on personal credit. So for any credit cards that show up on your personal credit, they can affect your credit score, but that's something that you can fix later. You can't necessarily fix that late payment the way you can a balance. And you can use EIDL to pay short-term debts. And so you could use EIDL to pay your business credit cards, for example, that are legitimately used for business purposes. And that might be another option for cash flow flexibility right now. Another option that's still around is the merchant cash advance. And the merchant cash advance is basically an advance on your credit and debit card sales. So if you have a business that has a lot of credit card or debit card sales, they will advance you funds based on your prior history with those funds. And then what they do is the next time, once you sign on the dotted line, the next time the customer swipes the card, they take their percentage out of that sale toward repaying the balance that you have with them. So it comes right off the top. So one advantage is that if you have an agreement where it's a percentage of sales rather than a fixed amount, then if your sales go down, you don't have to make a payment, and that can be advantageous. On the other side, these can be quite expensive and it can be confusing to understand the cost. They use something called a factor rate, not an interest rate. So that's based on the amount that you get advanced. And we do have a free calculator at NAV that can help you translate that cost into an APR. So you can compare it. So if you discover, for example, the MCA that you're looking at is 47% APR, you might decide, hey, I'm going to use my credit card that has 19% interest rate right now because that's a better deal for me. We just want you to be informed and make an informed decision about the financing that you use, especially in a time like this when things are rather uncertain. So you can find those calculators at nav.com/calculator. Financing AR as accounts receivable or factoring or financing is where you have companies that owe you money and you're going to get an advance on the money that they owe you. Often this is for services you've already performed, but they take a while. So when I was a self-employed business owner for many years, I did work for some very large financial institutions, and they require me to pay my credit card every month on time, but then they take 3-4 months to pay me for the services. So that's not uncommon. In fact, the bigger the client, the longer they probably take to pay. So you can use this to get cash flow more quickly. It can also be helpful in some industries that are considered higher risk. So the industries that are higher risk right now include retail, restaurants, and real estate. So one of our NAV customers, for example, is a construction company. They have an innovative product that is used in place of concrete blocks in big construction projects all over the world. But because the industry is risky, they have a hard time getting traditional financing. So this allows them to get paid. They can ship those blocks. They can have the invoice that is owed by the customer. They can get paid more quickly, and then they can use that money to pay their bills. It would be a very attractive form of financing, but again, you need to understand the cost that's involved, and NAV's calculators can help you compare that cost to other forms of financing. Microloans, I would encourage business owners who need a smaller amount of money, usually less than $50,000, to really check these out, especially in today's environment. Many of these are made through nonprofit organizations, economic development organizations, and community development financial institutions. And they are trying to help disadvantaged business owners in their community. Now, right now, things are tapped out on some of these programs. So some of these programs offered COVID relief loans that went very quickly. But we have seen Congress continue to authorize additional funding to be available to small business owners through these organizations. So I think you should continue to check back and make sure that you're looking at what's available. You can do this by contacting your regional small business administration office and getting on their mailing list. You can do it by contacting your small business development center, which often knows what's going on in the community. And you can also look at the Opportunity Finance Network, OFN.org, which publishes a list of members who make these types of loans, and that may be an option. One loan that falls under this umbrella of microloans is something called Kiva, KIVA.org. And they have expanded their loan program. It's a 0% loan with 0 fees, and they've expanded it to $15,000, used to be a max of $10,000 per loan, for businesses in the US impacted by the coronavirus, and you don't have to make a payment for the first 6 months. And they just sent out a report that they've raised an additional $500,000 for small businesses. They've made a lot of loans to traditionally disadvantaged business owners. So that's Kiva is a one source for microloans, but then cast your net a little bit wider and make sure you're looking at different options. Keep in mind that they're often credit flexible. So even if you've had some credit issues in the past, if you have a good explanation, you still may be able to qualify for one of these microloans. Vendor terms are also a very common form of financing, can be very crucial. NAV's co-founder, Levi King, his first business was sign manufacturing, and he said this was like the lifesaver for his business, because once he learned he was able to get the steel and the plastic and the concrete that he needed to manufacture signs for his clients, he was able to improve his cash flow significantly. So here you're going to the suppliers and vendors that you do business with and asking them if you can pay later. So often on net 30 terms, which means you have 30 days to pay. If you're a good customer, you might extend that to net 60 and net 90. If you have current existing vendor relationships and you're having troubles with cash flow, you might ask them for extended terms. If you do so, just make sure that they update their records so it doesn't look in your business credit report like you're paying late. You want to make sure that the new terms are reflected so that your business credit report doesn't show late payments. Another source to find vendors, if you haven't been working with this type of financing, is to go to nav.com/vendors. And there you'll see a list of vendors who are easy to qualify for. They don't check personal credit and they do report to business credit. So you could buy things that your business is going to purchase anyway in its everyday, included janitorial supplies, cleaning supplies, very important for many businesses right now. And then you can use that to build business credit and also get some additional time to pay. And one of the beauties of this is it doesn't show up on your personal credit. So if you do have some personal credit card balances, you're trying not to add to that, you might want to look at the vendor terms as an alternative source of financing. And then crowdfunding. I mentioned this as a bright spot right now because crowdfunding has been around for many years and there are different types of crowdfunding, but we've really seen an increase in crowdfunding to small business. And I think that's a great trend for the long term for small business owners. There are 4 types of crowdfunding. One is the Kickstarter type model, which is rewards based, where you get a reward. You offer a sample of your product, a gift card. It could even be a special exclusive recipe if you're a cupcake maker, for example, something that will entice your customers and reward them for contributing to your campaign. There's also equity-based crowdfunding where you actually have people become investors in your business. It's more expensive and time-consuming to go that route, but it's been successful with tech startups, healthcare startups, and more recently, restaurants getting equity investors in their restaurants. So don't rule it out if you have a business that you think will scale and could attract, investment capital in your business. Debt-based crowdfunding is a loan that you have to pay back. So Kiva, which I mentioned earlier, is a microloan and a combination of crowdfunding because you raise the funds for your loan through the lenders on the platform. The lenders are people who want to contribute and help small businesses. So you pay it back eventually. And when you pay it back, that money becomes available for them to lend to other small businesses. So you do pay back with debt crowdfunding, but the interest rates are usually attractive. So there's a few debt crowdfunding platforms for small business, and usually you'll have the interest rate in the 8 to 15% interest rate range. This is the one form of crowdfunding that probably will do some kind of a credit check. Kiva's very credit flexible. They basically don't want to see you're in bankruptcy or had a recent bankruptcy, but the other ones might check credit and might base the interest rate based on the credit worthiness of the borrower. And then, of course, this type of crowdfunding, and then there's the 4th one, which is the GoFundMes, and that is donor based. So there you're just saying, hey, I'm not doing well. I need your help in this crisis. Can you donate? And I've seen business owners be successful that way. In fact, GoFundMe has done some matching for small business donations, and we've really seen an outpouring of support for some small businesses. Now, for all of these types of crowdfunding, the number one thing you can do to be successful is to have a way to reach your fans. So one thing we've seen with this crisis is that businesses who had found a way to establish and reach a loyal fan base have done better than those who haven't. So whether it's a social media following that you nurture very carefully, or whether it's an email list that you gather and you stay in touch with, you need a way to reach out to those fans and customers. So going forward, if you are experiencing a lull or maybe even a closure of your business right now, getting a system in place to nurture that kind of customer following is really important. I had a story in my book, Financial Own Business, about a guy who creates custom Ducati engines, and he has an email list. And so when he needs money, he emails his list, see if there's enough interest, and then he'll put up a crowdfunding campaign, and then he'll manufacture, whatever it is that his audience wants. So very niche, but very successful. So keep that in mind as an option going forward. So, what can you do to navigate what's going on right now? Well, one lesson we learned from PPP and EIDL is that businesses that have a formal business structure are navigating it much better than those that don't. So a lot of business owners consider themselves independent contractors. They are sole proprietors. They file what's called a Schedule C with their tax return to report their business income, but they don't really think of themselves as business owners. So a friend of mine was trying to help her sister navigate PPP, and her sister got mad because she sent the bank like her whole personal and business tax return, and they were trying to tell her, we just want the business part. And she said, I don't understand what you mean. What do you mean by just the business part? She didn't understand that, that Schedule C is basically the tax return for the business. So you do want to make sure that if possible, you incorporate. We do find, and that could be an LLC, S Corp, or a C Corp. We do know that some lenders will only lend to businesses with a formal legal entity, because as long as you're a sole proprietor with no business structure, there is no legal separation between you and your business. You are one entity. So as much as possible, consider this could be a good time to form that legal business structure. Then you want to confirm your business's industry. This is really key too. So this is a code. It used to be called the Standard Industrial Classification Code. That still exists, the SIC, but the government updated it with the NAICS code, North American Industrial Classification System, which is a more detailed code. And these demonstrate the industry that your business is in. So if it's wrong, it could either mean that you don't get offers for financing that you might be targeted to those in your industry, or it could mean you get excluded from offers because of the industry. So if you get your business credit report, check this and make sure it's accurate. We often find that there are mistakes. And I'll give you a quick example from a NAV customer who manufactured real estate signs. So, yard signs for real estate agents, and his code indicated he was a real estate business when he's really sign manufacturing. And real estate is high risk, sign manufacturing not so high risk. So once he got that changed, he was able to get the financing he needed. So just keep in mind that that's an important factor in the financing that you may be eligible for. All right, then you want to get a separate business bank account. We had so many business owners who didn't have this and ran into issues with both the EIDL and the PPP. And increasingly, lenders are going to want to check your business revenues. And one way they may do that is to link to your bank account just to see what your revenues are. This is a read-only access. It's the same thing we do at NAV to help our business customers understand their cash flow. Same thing that if you have a site like Mint for your personal finances, same kind of scenario, but that information can help them make a decision. So make sure you have a business bank account and you're only using it for business purchases. I can't tell you how many people we heard from who said, well, I pay my personal mortgage, out of my business account. So how do I demonstrate that when I'm trying to qualify for PPP? And the basic answer is going to be very hard to do that. Or we've had people who just say, well, I don't really pay myself. I just take money out of the business, or I just may pay for expenses, personal expenses when I need it. So you want that business bank account and you want to use it only for business expenses. So if you need money out of it, you write yourself as the business owner a check or transfer a payment to yourself, and then you use that money, your personal money, to pay your expenses. I can't emphasize how important that is, especially in the environment going forward. Knowing your numbers is going to be crucially important. I was a business owner for many years, and I could tell you, even as a financial person, I hated this part of my business, but it really is essential. And this really came home to me recently because NAV gives a quarterly small business grant. And for the first time, I was on the committee that helped to choose those grant winners. So I was given a list of businesses to evaluate their application. And the ones that really stood out and the ones that were able to make it to the next round were the ones who could very clearly say, with this amount of money, here's what I'm going to do. And here's how it's going to help my business solve a problem or take it to the next level. And lenders want to know that too. Lenders don't want to invest in an idea. They want to lend and minimize risk. So being able to show the numbers that justify how this loan can help your business can be very important. Your accountant and bookkeeper should be your very best friend right now. All right, then fix mistakes on your credit reports and monitor them. So, research done by the Wall Street Journal with an outside research firm found that 25%, it's either 20 or 25% of businesses that check their business credit found an error or omission that was serious enough to put them in a different risk category for their business credit. And then there have been a number of reports, including one from a National Cybersecurity Alliance, that shows that business identity theft is on the rise. It's actually easier to steal a business's identity these days than it is to steal personal identities. And so you really want to check and monitor your business credit to make sure it's accurate, that it shows your business in the best light, and to make sure that you don't see any suspicious activity that could be a warning sign that there could be some type of fraud going on. So one way to do that is to get a free NAV account. At NAV, will show you your business credit from Dun & Bradstreet, Equifax, and Experian, and we'll update it. Log in every month and you'll get an updated report each month, and we'll also show you your personal credit from Experian. But then more importantly, our goal is to match you to financing. So our goal is to use that data to help you find financing offers. And in this changing landscape, I think that's extremely important, because what happens is we'll proactively work with the lenders who want to start lending again, and we'll serve up those matches or those offers to businesses that meet the criteria that they're looking for. So you don't have to figure out what's available right now. You can go to your NAV account to see what's available right now. And if you want to talk to someone, we have a phone team who's happy to talk to you, no pressure, to walk you through your options. And if you need a larger type of loan that might require a lot of documentation and preparation, we even have a team that can help with that at no cost to you. So we get paid by lenders for matching small business owners to financing options, and you don't pay anything for that service. So just keep in mind that we're going to be watching this and monitoring it for you, and we're going to be working hard to help provide those offers so that you can find out what's going on day by day in a very rapidly changing lending environment. So that's the overview of what's going on today. And I want to go ahead, I'll stop the share for a moment and go ahead and see if we have any questions. And if you do have a question, feel free to put it in the Q&A or the chat, and I'll be happy to try to answer that. And again, if you want to reach out to me, if you're interested in our resources for building business credit, for example, you can find that in your NAV account, but we also have some e-guides that are available. I'm happy to share those with you. You can email me at webinars with an S, webinars@nav.com, and I'll be happy to get that out to you. All right, well, if we don't have any questions, we'll end the recording by now. But if you're watching a recording afterward, again, you have the email address, or you're welcome to just share your questions in the platform where you're viewing this recording, and we will do our best to answer them. Thank you.